All right, so welcome to the Future of Payments Canada. My name's Jordan. I'm going to sort of introduce what we're going to be talking about today and then have the panelists introduce themselves. So starting off, a little introduction to sort of what we're talking about. While more than 6 out of 10 smartphone users in Canada have made mobile payments over the course of the last 6 months, the vast majority of this has been remote payments such as bill payments and transfers. And what we found is in-store mobile payments have really struggled to take traction in Canada. The goal of this presentation is to provide insight into the opportunities and challenges facing mobile payments in Canada and identify key factors that have led to the place that we're in right now. So as I said, my name is Jordan Goddard. I'm the CTO of FOOi Inc. It's a peer-to-peer and peer-to-business mobile payment app allowing people to send money back and forth on their phone as if cash was still around, as cash slowly disappears. Although I'm very young, as everybody can tell, I do have a fair bit of experience in both fintech and specifically entrepreneurship. So I'd like to start off by having the panelists sort of introduce themselves from my left to right. So.
Hi, my name is Michele Poole. I've been around in payments and financial services and digital for about 15 years. Primarily, I've been focused on strategic business strategies, delivery, customer experience, and really also helping large organizations as well as small fintechs figure out how to leverage design thinking and innovation and creating frameworks around the customer experience. I'm a huge customer experience advocate, and I like to leverage a lot of test and learn techniques to figure out how to create experiences that usually raise net promoter scores and create raving fans. Currently, I'm at Buckzy Payments, where I'm the global head of customer experience. No surprise, loving customer experience. And at Buckzy Payments, we're all about the real-time movement of money on an international scale, as well as remittances. And so that's moving money from bank account to bank account to wallet, and then bank account to wallet, and wallet to wallet. And we have a multi-currency business wallet.
All right. Hi, everyone. My name is Wei Key. I'm a managing partner with Simon-Kucher and Partners. We're a global consulting firm focusing on what we call the sunny side of consulting, which is actually revenue strategies and not really cost cutting. So, and I head up our financial services practice for North America, US, and Canada, 2 markets. I actually split time between New York and Toronto quite a bit, and being financial services consulting for about 11, 12 years at this point. I have a background in what these days people would call machine learning, so it's kind of quantitative modeling and analytics. And you know, kind of in my spare time, I also teach a bit at Queen's University Business School, as well as Columbia Business School on things related to pricing, monetization strategies, and occasionally also on financial services. Very happy to be here.
Hi, I'm Christelis. I must say it's very impressive to see so many people so early in the morning. Thank you for coming. So my company does market research in payments, and we publish studies every year. We do the Canadian Consumer Payments Survey and Canadian Payments Forecast, and we've been doing that for 10 years. The Canadian Payments Forecast has been around for 10 years. And what we try to do with that publication is track developments in payments. It's focused mostly on consumer payments because that's where the bulk of the transactions are. And we look at pretty much every kind of consumer payment modality. So my role on the panel is really just as an industry analyst to give you some feedback on some of the trends that we're seeing and some of the statistics that we've gathered over the years. Thanks.
So to continue on with what Christie said, one of the main goals of this is to sort of have it more as a discussion. I have 6 main questions that are based towards individual panelists, but it's very, very much open to everyone, as we've discussed beforehand. But once we've gotten through these 6 questions, I'm going to open it up to questions to you guys, and if you guys have anything you want to say or or any questions you want to ask us, let us know. So first question starts off sort of directed at Michele. What's the current state of mobile wallets enabling card-not-present transactions in Canada, and how does this compare globally?
Well, I think one could argue that in Canada, overall, we're still in our infancy. I think that if we, Canadians still really like their cards. And bottom line is it's still often easier to pull out your card and use your card than it is to open up a bunch of different wallets or to actually pull up the wallet, click, tap, and so on. And so I think that that's a real challenge. If we look globally, I think it's the emerging markets that are really setting the trends. And if we look at usage and adoption there. So, China, right? 86% of the population in China is using mobile payments. Even if we're looking at, say, like Thailand, I think in Thailand it's around 67%. Even Vietnam is getting up there. I think Vietnam is like 46% in that ballpark. So if we're looking at the emerging markets, that's where we're seeing greater adoption and more trends. I think there's a lot of different reasons for that. And I think the differences between kind of North America and in Canada in particular, and we all use those cards. We say we like mobile payments, but then there's lots of enthusiasm, but there isn't any action or adoption behind that, and we're not seeing the uptake on that. But if you look to, say, China, where that penetration and adoption is pretty high, if you think back to kind of the infrastructure, right? And so they had an opportunity really to leapfrog, if you think about a lot of those rural areas not having a landline, and then going right from cash into being able to use your smartphone to pay. And we still have a lot of behavioral issues in North America, around that are preventing some challenges. I'm sure you have something to add to that.
So I'd like to just focus on the Canadian thing, because I think we have a unique situation in Canada. I was actually looking at some of the stuff we did on mobile payments before. Does anybody remember Mobile Monday Toronto? There used to be a networking group called Mobile Monday Toronto, which was kind of wound up probably about 5 years ago. But we hosted a panel there on mobile payments in 2011. And that was at a time when everybody thought mobile payments was the answer to world peace in Canada. And we're still doing it. So I think we see this in many different technology areas, that there's a very big promise and there's a lot of applications seen for the technology, but it really takes a lot of time to bed down. Now in Canada, we have a very nice contactless payment system. The contactless infrastructure is out there and it's almost ubiquitous. And it's so easy to just take out your card, and people are accustomed to paying with cards. So going the route of getting comfortable with using your phone is a big adaptation from a consumer point of view. So what we're seeing that more and more consumers are using mobile payments, and it's slow, but it's building. But the number of transactions that they're doing on their phones is staying steady. If you contrast that with the contactless payments, you're seeing more and more users using contactless payments, but the number of payments they're doing every month is increasing dramatically. So we're not quite at that point yet in mobile payments, but the indications are we're getting there probably within the next few years. And we can talk as we go through the discussion about why we're in that situation.
For sure. So the second main question, directed mostly away, but again open to all panelists. What's the behavioral economics behind adoption, both domestically and internationally?
So actually, I think there's a point that Michele mentioned earlier as well about behavior. One of the things that's interesting is we did a more recent study on mobile payments adoption. It's not really unique to Canada. It's actually kind of more globally about fundamental human behavior. You would think that the reason why people don't use mobile payments is because of security concerns. I think that usually comes out to be one of the top reasons that comes to mind. It turns out that there's actually a dichotomy of views on this. If you segment the customers based on those that have actually used mobile payments versus ones that haven't, right? So two separate groups. The ones that have used mobile payments have zero security. I mean, have a little bit of security concerns, but it's zero might be too strong. But it wasn't the top reason. It was maybe like top, number 5 and number 6 in terms of their concerns. The ones that haven't used it do think that security is the big concern. So I think that's one thing that's really interesting. I think maybe education is not enough. In fact, if you think about the mobile technology, the fact that you can generate, kind of a hashed a credit card number that is not your original credit card number, that's actually safer, right? So a lot of those things, consumers don't think about. All they think about is they have everything on the phone. If they lose the phone, that's basically their life. That's lost. So that's why there's that area of I would call it a behavioral barrier. The other thing that's also interesting, which is often overlooked in some way, is the actual mobile experience at a point of sale, and that was also in our recent study. We found that. If I think in the early days, when you have kind of the mobile technology, whether it's on Google or on Apple or more recently on Samsung, it actually takes a few more seconds at a point of sale, right? So just imagine what was that experience. You take out your phone. This was before Apple had the thumbprint thing, and so you kind of have to type in a password or something like to activate the app. And then you put it on the POS, right? And once you put it on the POS, how long does it take? It takes like maybe 5 seconds. It feels like 5 seconds of eternity, because like in Canada as well as in a lot of the similar kind of Western cultures, for those 5 seconds, you don't know where you place your eyes. Do I look at the cashier that's in front of me, or do I try to pretend I'm busy doing something? And so there's there's an angle from behavioral economics, and because in the same study when we actually told the customer, well, what if you use cash? Does it feel like an eternity to you? Objectively, cash payment takes about a minute to complete, because you hand the cash over to the cashier. The cashier needs to find the change and give it back to you. But because you're constantly in motion, that there's a theory in behavioral economics that actually suggests that you don't feel like it's taking eternity because you're busy doing something. Whereas if you just put the phone down for 5 seconds, you're waiting for the machine to accept the payments. Unfortunately, that feels like eternity. So there's this particular angle, which is kind of behavioral barrier angle, and it may be specific to certain cultures and everything. I don't think anyone's actually talking about it, but that might be one of the bigger hindrance, after the security point that I just made, for lack of adoption. Now, the good news is, of course, things will change, and technology has changed. Samsung Pay, for example, when they first came out, it did take like upwards of 10 seconds. But starting this year, if you actually use Samsung Pay, it's near instantaneous. So things will move in that direction.
But I think also from a behavioral perspective, in North America, it's almost like it was taking your credit card and putting it into a mobile app, right? Well, really, where's the value prop on that, right? And if you look at, say, in China as an example, right, it's not just, when you're using your WeChat Pay, it's not just another way to pay. It's a lifestyle app. It's very integrated. Everything is right there. It's almost like, and also, say, Asian consumers are very much more integrated into social, right? And it's very much a social thing. So when you're paying with WeChat Pay, it's a lifestyle. It's everything. It's not just ordering your Uber. It's paying for your meal at a restaurant. It's communicating with your friends on social and talking and sending money, and it's all very integrated, and it's very much a lifestyle. And that's not the way it's been adopted behaviorally in North America.
Definitely. I actually think with the behavioral difference between the U.S. and Canada, there was a bigger adoption in the U.S. for Apple Pay, Android Pay, that type of thing, because tap really wasn't as established when they came out, whereas in Canada, we're all used to tapping already.
I think maybe a little bit history that I knew. When the reason why Canada adopted tap was because Canada first adopted chip, right? And then chip was the same behavioral point that I just made on mobile. If you insert the chip into the machine versus previously it was swipe, right? You insert the chip into the machine, it takes like 5 seconds or more to actually complete, because you actually have to hold the card in the machine for the whole transaction to be complete. And it's designed with the chip. And I heard a viewpoint which basically said that this was painful for everyone. Everyone recognized that was a behavioral barrier. So and of course in Canada, the 5 largest banks being the 5 largest issuers for cards, they got together and really accelerated the adoption of the tap card. And so that overnight, there was a study from Bank of Canada released a few years ago, looking at cash transactions in the country versus credit card, small amounts based on tap. Almost overnight, previously Canada had about 20% of all transactions being cash-based. That 20% dropped to 8%. There were 12 percentage point moved to credit card-based transactions, which were primarily driven by tap. So the point again is, if you actually make it easy for the customer, and then there's actually industry adoption in terms of POS devices that can actually accept tap, you will see behavioral change. You mentioned U.S. Interestingly, where we are right now in the U.S. Is that a lot of the large issuers, I don't know if you saw in the news, are in some way quietly issuing tap cards, which is like, 10 years behind the rest of the world.
It's funny, I was at a conference last year, and it was for a major card brand, and they issued cards to everybody who attended the conference that had tap. And I was speaking at the conference, and they had me stand up, and they said, how are you experiencing tap? Like, how do you find tap? And I was like, I use tap every day. You guys are way behind.
Yeah, no, exactly.
So to sort of build on this, and this is sort of directed at Christie, domestically, what are the biggest barriers to mobile adoption?
So that's a very interesting and important question. I don't think we can unravel it today, but some of the things that we have seen, if you look at the history of mobile payments in Canada and the kind of applications, if you like, that have come to the fore, they've been very, you could say, intersectional. So if CIBC issues a mobile payment app that's only available on Android and Rogers, you can see it very much focuses on a very specific segment. And that's great to test the market, but it's not a great ubiquitous strategy. So what we're seeing now with things like Apple Pay and so on, all of the card brands, all of the phones, major phone manufacturers have got that capability. So you can pay, so it's not disadvantaging any particular customer. Then if you add the banks on top of that, it's not going to that intersectional point where it's only available to a certain number of players. And that's one of the things that has hindered it to now. We haven't really had an offering which makes it easy for the consumer to pay. We are starting to see that now, but to the behavioral points that you made, there's a lot of questions in the consumer as to why should I use a mobile payment? What is really the benefit? And the research that we did a few years ago says that the mobile payment isn't the thing. If you want to get people to use a mobile payment, how are you going to get that behavior change? You actually have to get them to be looking at the phone and at that point of payment. And maybe the trick to doing that is not the payment app. Maybe it's a loyalty or an offer or something like that. So we haven't got to that point yet in terms of that sort of behavioral change. But where we've got to is that we can actually make payments, and it's fairly available to pretty much anybody with a smartphone. So just one other thing is that We spoke to banks many years ago about mobile payments, and they said to us, well, some of them said to us, well, we don't want to rush into this. What we want to do is we want to get people comfortable with mobile banking. And we, from the stats you quoted, 60% of people have done some kind of mobile payment transaction, and that's really been done mostly through mobile banking, bill payments and transfers. So we're sitting at 60% of people that are comfortable using their phones to do some kind of payment or transaction. It's now the rest will follow. It's just giving the consumer that sort of value proposition as to why you should be using your phone when it's so easy to take your card out and tap it.
Just to add to what Christie was saying, I think there are potentially two trends, and maybe they will converge at some point. But there's the trend of basically financial institutions coming up with some kind of a standard, the whole market will accept, and then it's still card-based kind of payments. Yes, it's mobile payments, but it's still card-based. The other trend is individual stores these days have QR codes and things, right? So it's kind of in the direction of what China has gone to, but except it's not consolidated. So like you go to Starbucks has their own app. You can make payments through their app, and if you go to some lunch place, maybe they have their own thing. And so I don't know where the market is going at this point, because we're seeing both happening in some way, right? And would they actually converge at some point? I think that's interesting to think about. There was a point, I think it was in this room yesterday, a gentleman from Google Cloud that was making a point about open banking, and he made the point yesterday saying that in the platform business, it may be a winner take most outcome, because earlier before our panel started, we're chatting about Lyft and how great Lyft is in terms of discounts, but the reality is, right, the reality is in most of the platform business, I mean, most people have heard of Uber, maybe half of the room have heard of Lyft, most people have heard of Airbnb. Nobody would know who comes after Airbnb, right? So if you do the platform business correctly, and the payments is certainly mobile payments is certainly one of the platforms, you could actually be the only one in the marketplace. And this already happened. By contrast, in a country like Denmark, I think it was Danske Bank, which is one of the largest banks in Denmark. But structurally, it's similar to Canada. There are like 3 or 4 big banks over there dominating the market. But Danske Bank many years ago launched a kind of a modern payments platform, which now became the standard for that country. Everybody, in fact, they have like over 90% transaction volume going through their platform. And so there's already kind of a case where that could happen. I think in Canada, it's at an interesting juncture in terms of fragmentation and so forth.
Definitely, and to sort of follow on that, I think looking at Canada state versus other countries, there are a lot of countries that have sort of paved the way in the different models of going through. I know Swish was a huge one for Sweden, but as Canada sort of catches up, I think a lot of the aspects of early adopters is the use of features that people actually want to use. So that brings me to the next question, which is directed mostly at Michele. How do user-demanded features differ from the industry demand and industry features of mobile wallets in Canada?
Well, I think it's interesting because I think if you think about what the consumer wants, I think frictionless payments is not what they want. They want invisible payments, right? Think about your Uber experience. And I would say, like, in many cases, what the consumer wants is maybe the next unicorn, really, right? Because the thing is that you want to have those invisible payments. You want to have that experience, that lifestyle. You want to have the higher limits that would be available. But at the same time, from an industry perspective, it's keeping up with the security, the regulations, fraud challenges, and the consumer is expecting that, you know what, I'm getting that too, right? My identity is safe, my fraudulent transactions are protected, but I'm having all these other capabilities and features as well. And so I think that's where it's a bit of a challenge. It's a bit of that that kind of tipping point, right? And so where that will head and where the kind of winner will emerge, I think in particular in North America, is kind of nailing that and being able to have kind of that winning app. When you talk about, the Starbucks, the Walmart apps, we have all those in North America, but having all those individual apps as a consumer, that's not meeting your need at all, because I've got to pull that out. I've got to pull this one out. If I'm in this store, that's not meeting the need at all.
Mm-hmm.
What do you guys say?
Can I just make a comment about the individual payments? So this is one area where I think the industry is at odds with what consumers want, because consumers' payment is, it's like going to buy gas. You don't really want to do it, but you have to do it. So invisible payments is very much what a consumer wants, but a lot of the industry players don't want their brands to disappear. And if their payment brand disappears in the transaction, if it's a BMO MasterCard transaction and it's nowhere seen, it's happening in the background, that brand awareness. So the companies don't want, and loyalty companies don't want their brands to disappear as well. So that acts kind of like as putting a brake on what you can give to the consumer in terms of invisible payments. They don't really necessarily always want to give that.
But I think that's kind of North American focused, wouldn't you say?
Yeah. I'm talking mostly about Canada, actually.
Yeah, and I think that's really fair.
Yeah.
But I think globally we, aren't seeing those same kind of challenges.
Yeah, maybe just to add one point, just on the consumer side, there are certain features. Thinking about, making sure that everything works. I think that's sort of the hygiene factor. Everyone expects that, and security, all that stuff. But there are certain features that maybe a certain segment of consumers would need. So this is kind of maybe the differentiating point if you're entering into the payments business. For example, Venmo, which is a PayPal company. Of course, wildly popular in the U.S. because there's nothing in the U.S. that facilitates P2P payments easily until Zelle came along, right, by the banks. But one of the features for Venmo was basically to broadcast to the world that you just, hung out with someone, like, one of your friends, like you were splitting the bar tabs or whatever. Like, so that was like the feature, and it does cater to a certain demographic segment, if you will. And then, of course, if you're thinking about, what some of the banks are providing in terms of, personal finance management and payments, obviously is one of the elements, kind of aggregating, giving you some advice on how you're being spending and so forth. It might cater to a different segment. So I think there's still differentiating point in terms of features that could be offered once you figure out what the rails will look like.
Yeah, especially if you start to look at loyalty, right?
Yeah, exactly.
That would definitely come into play.
Yeah, actually, loyalty is a good. So Apple Pay, right? Apple recently the credit card thing. Of course, it's credit card. It's still kind of the more traditional way of thinking about it. But it's interesting the way they're playing this. On the one hand, it's a virtual card that sits in your phone. But then they also want to issue this platinum card that has no numbers on it. So that kind of goes back into a little bit like payments is virtual, money is, other than cash, right? Once we're moving to cashless society, then money is virtual as well. Why do we still need to issue a piece of metal in this case? Because it's different, it's cool, and makes you feel like a dork. Having it kind of thing. No offense to anyone that already has it, but I think it's really cool that So sometimes like you need a little bit of a physical, tactile, kind of a feature, if you will, right?
Well, and I think that kind of sort of plays to the trend of people don't really know necessarily what exactly they want. And it's often been, in the past, companies that sort of drive the innovation, and people pick up what they think is unique and useful to them. In Venmo's case, the public feed was very popular early on, and as Venmo sort of progressed throughout the US, I know a lot of people who have been sort of hesitant towards it because of that feature. And it'll sort of shift, I think, as Canada adopts mobile payments further into the future. And I don't know if necessarily it will be one player that sort of dominates, or if there'll be certain demographics that choose one because of a certain set of features and a different demographic that chooses another.
I think that's a good question.
So to look at sort of modernization in Canada, how will modernization in Canada and in real-time payments impact mobile payments?
So it's a pretty big question at the end. Like, this whole conference, there's multiple tracks about real-time payments and so forth. I think, I just make a point about behavior. If it makes sense to do that, then from a kind of a consumer standpoint, and I think maybe even bigger from a business to business standpoint, when it comes to real-time payments and modernization of infrastructure, there are a lot of use cases that people would love to have, right? So instead of waiting for payments to settle maybe towards the end of the business day, and that's fast, and if you're doing bank-to-bank transfers, maybe it takes like a couple of days for this to go through. Cross-border transfer, I know someone from CIBC yesterday was advertising the new business platform that was kind of near instantaneous. So all I can say is that there are different use cases that are out there that consumers as well as small business owners are looking for. Is there a standard? I'm not sure. And then for service providers, the question is, well, how do you then differentiate those services, and is there actually a monetization angle? I think that's these are the things that pop into mind when I think about this.
Christie, do you have something to add to that?
So I think the back end for sure, or anything that relates to settlement, real-time rails will have a big impact. But from a consumer point of view, I'm not really sure that in mobile payments can make any difference, because that payment is apparently instantaneous and real time to them anyway. So it's more about what's happening on the back end. But I think it's still an open question. We still have to see where it's going. Maybe there's new stuff that comes out of the pipeline.
Definitely. I think actually, if you look at the comparison between what the user's seeing and what the companies developing this are actually looking at, there's a bit of a shift, because users often see this instantaneous offering of a payment and don't recognize what's actually happening behind the scenes. So that sort of drives how this shift will happen, and I think there'll be an education on both the consumer side and the business side on what sort of progresses.
But I think to your point, from a mobile payments perspective, the real-time rail, I don't think will have a huge impact in terms of mobile payments. I think real-time rail overall will have the biggest impact just in that kind of small business segment. I think that's where there will be the biggest impact and opportunity.
Definitely. So this is my last main question, but definitely not the end of the conversation. What does the mobile wallet landscape look like in the next 5 years, and what opportunities do you see emerging for banks and incumbents?
That's a big question.
That is a big question.
I'll maybe break it down a bit. I think in Canada, the opportunity, I would say, would be for the big financial services institutions, the big banks. Consumers really trust the banks and have that high level of familiarity and understanding that they're going to keep their data secure and all of that. And so I think the opportunity is for one of the banks or the banks altogether to work with a fintech or come up with kind of that winning app, because I think that that's the problem right now. There's just too many mobile apps, and there hasn't been a clear, like I say, a clear unicorn or a clear winner emerge in Canada. And so I think that's where there's an opportunity for the banks to be able to crack that nut, if you will, to get the increase in the adoption and to really see some traction in Canada. I think if we look globally, I think the question, is will there really even be POS terminals, as an example, longer term, in that kind of 5 to 10 year time frame globally. I mean, in Canada, I think there will be, but on a global scale, I think maybe there won't.
Well, so I think maybe 5 years is too short of a, because
I'm optimistic.
This guy's very young.
My entire premise is wiped out with you.
Yeah, exactly.
We all carry the
See, I said
machine with
exactly
us.
what you wanted me to say. I'll take the $5 later.
Exactly. I think if I kind of try to tackle it from a different angle, when I think about innovation generally, right, whether in mobile payments or anything, there are a number of factors that could influence the direction of a market, right? So you could have regulatory action that comes in and say, let's do this, and everyone needs to do it. So that's one way of doing innovation. You could have consumer-driven sentiment, like I need this, and someone needs to develop something convenient for me to make payments. So that's a different angle, and then of course the industry can then come together and try to juggle between the regulatory side of things as well as the consumer side of things. So that's why I said 5 years is a little bit. It's a little bit of a blink of an eye. But of course, the first iPhone came out in 2007, and back then only I would say like 40% of people actually use smartphones of any type, or even lower. Because there were other competing brands at the time, right? And now it's 80-90%. So things do change, and I think when society moves forward with more and more comfort in using mobile technology, or just by default using mobile technology, because these days you probably won't be able to buy a dumb phone anywhere like visible, right? So I think so what I can say is I don't know anything dramatically necessarily will change in 5 years, but if one or two things happen, if regulators decide to do something, to really introduce standards, and of course there are conversations already happening, and that might change things. And on the other hand, consumer demand, if we all get together and realize really, maybe there's a better way of doing payments than just using cards and tap and go, and it's convenient, and it's seamless. It's to Pamela's point earlier, that it's not actually about payments itself. It's about how you live your life. Then I think things will change.
Yeah. So just the question was really about the future of mobile wallets and so on. And I've always had a problem with what is actually a mobile wallet. And are we talking about a mobile app, which is payment, or are we talking about a replacement for your leather wallet? And I mentioned we've been playing with mobile payments for at least 10 years in Canada, and we've seen quite a few different iterations. And I noticed some of the banks have now abandoned their mobile wallet and pointed you to Android Pay or Apple Pay. I don't think we are yet at the point where we can see where that's going. I think there's a lot of, to your point about different types of innovation, I think the fintechs are coming up with various atomized ideas. Where this leads ultimately to how you pay on a smartphone, I think is still an open question. But if I think about what I want, I don't want to have a separate app for a BMO card, and then Apple Pay, and then some other prepaid card and so on. I want a wallet. I want a wallet where I can decide these are the things I want to use to pay. These are my loyalty cards, and it must be easy for me to do whatever I want to do. It must know, ideally, in this ideal world, that if I'm walking into a Shoppers, that I'm going to use these loyalty cards, and this is my preferred method of payment. And I think, with things like AI, that should be fairly easy coming down the line. So if we take a consumer point of view rather than, what can a bank do and what can a mobile network do, I think that's where we'll end up with a solution that really meets the consumer need.
And I like what you said with the consumer's point of view, because I think in the next 5 years, again, optimistic view, I think there's realistically going to be there's one or the other way of things sort of progressing. One is driven by consumers, and consumers saying, like, this is what I need, this is what I want, and sort of driving that use of a mobile wallet. However, there's the alternative, which you see from like Starbucks and various apps that allow you to use their own platform to pay. I could see those getting together from the merchant point of view and gathering up and saying, hey, instead of using each one individually, why don't you use them together? And there's companies like mine that's focused sort of in between, trying to give both sides what they want. But again, it's going to be one side or the other that sort of determines what point we move forward with mobile wallets and sort of drive it. But until that sort of tipping point, I think it's going to be a lot of the companies sort of pushing it on the consumers until the consumers really start pushing back.
Can I make one more point? Just because I think what you say is exactly right. I think, I don't think that the consumers, however, are going to say, these are our needs. What's going to happen is there's going to be different offerings coming up, and it's almost like a process of natural selection. These are the things that are going to stick, and it's going to be a set of apps or a wallet or some kind of configuration on your phone that really resonates with what I want. I probably couldn't tell you what I really want, and I think this was the point, that Steve Jobs made.
Yep.
Consumers don't know what they want.
Well, and it goes back throughout innovation in human history. If you look at Ford, he said, if you asked a person what they want, they'd say a faster horse.
Yes.
You've got to see all the options before you can really make an educated decision on what the best move forward is. And I think as payments progress in Canada and throughout the world, I think different countries will differ based on the economy in the country. A good example is India has a large volume of unbanked users, which is one of the driving factors of them having early adoption for mobile wallets. China has a huge influx of people and difficulty transferring data digitally, so mobile wallets like WeChat, Alipay, they took off quite quickly. Canada having an infrastructure early on that sort of supported this instantaneous transfer has spoiled us and caused us to actually slow down in the progression towards mobile wallets. What do you guys think about that?
Absolutely.
All right. So at this point, I'd like to open it up to you guys. And does anybody have any questions?
Yeah, just in listening to the conversation, I noticed that you kind of weave a little bit between different payment types, and it would be interesting to kind of understand maybe a little bit about the barriers that exist by payment type, because in the behavior around adoption for certain capabilities around mobile payment versus like a Ritual or an Airbnb or a Lyft or Uber type payment versus just straight POS replacing a card, I think are very different considerations for behavior and the barriers. And so it'd be interesting to kind of get your take on, maybe by payment type, what kind of considerations need to be made in order to motivate and drive adoption for mobile payments in a more ubiquitous way.
So I'll start off with that, just knowing the sort of digital payment wallet idea. I think on the back end side, like the company side, it's pretty universal amongst the different options. Fraud is likely going to be a driving factor in determining how we move forward. However, on the user adoption side, it's totally different between the two. I think you guys might have a pretty strong opinion on this, so why don't you guys take it off?
Well, I think also, the difference in generations, if you will, comes into play as well. So at the point of sale, you will have more millennials actually leveraging the mobile payment options at the point of sale versus your boomers. And we've seen that that's kind of one of those behavioral things around that. If you look at kind of the digital wallet space, it's interesting because it's not actually the same. And so boomers are comfortable with a digital wallet, especially in the case of, P2P payments or sending money back home or making a bill pay for a property abroad using your digital wallet. Boomers are quite comfortable with that, and so you'll see that there. But not to say millennials aren't either, they are as well. But I think that's kind of one of the differences between those two. That's what we've seen.
Well, and being a millennial, I see it sort of as the thought is, should the merchant initiate the payment or should the purchaser initiate the payment? With Ritual and various other apps like that, to the merchant, they feel okay, they get an order and the payment together. So the person making the purchase is sort of initializing what they're ordering and what they're going to pay, and showing up and receiving the product. Whereas in a more traditional format, utilizing Apple Pay cards, it's more you're interacting directly with the merchant. The merchant initializes the payment by saying, this is what you owe me, and there's that interaction there. So I think there's sort of two sides to that, and that will sort of determine which direction things go. And I think mobile wallets pushes more towards the individual initializing, and there's a couple other options like Apple Pay that are pushing more towards the merchant initializing.
Yeah, I'm wondering, just a slightly different angle.
Sorry.
Which is the payment rail is actually behind the scenes, right? So a lot of the payments in North America are card-based. If you go through card network, from a monetization standpoint, I mean the card, there's interchange fees and all that stuff, and they're pretty high compared to some of the other payment rails. One question mark, and I don't know, fundamentally the behavior will necessarily change, because as long as the consumer pays the same thing, for whether on Ritual to through the Ritual app to buy a meal versus like going to the restaurant to actually order using card and so forth, or cash. As long as the user pays the same thing, I'm not sure behavior necessarily would change. But the point I'm trying to make is there are different payment rails behind the scenes. And one thing to watch out for is an entrant or technology player, or even like a traditional player. And we know like some of the large card networks, Visa, MasterCards of the world, are building new payment rails that are not card-based payment rails. So these are all kind of innovations that are not necessarily known to the consumers, because these are infrastructure type of things. But if these payment rails have a different way of monetizing the payments, and maybe they're cheaper than card networks, and if merchants start to kind of veer towards those options, then that might actually change consumer behavior. Like consumer behavior in itself, as long as you charge them the same thing, whether they use card or cash or anything, that's not going to change. But the merchant behavior shifting might actually steer consumer shifting.
I think we had a question over there.
So a lot of this mobile payments really addresses the C2B scenario. But as we move up market, we're looking at a B2B scenario. And with the B2B scenario, there's more of a requirement with data to flow with those payments.
Yep.
And so do we have kind of line of sight on how, as we move up market, which is going to open up, again, the opportunity for mobile payments? Because right now, I think the B2B space, mobile payments is limited. Maybe small business sort of getting into it, but even with small business, there's a need for them to have the enriched data. As you know, data is king right now. So how do you see that progressing?
So just maybe I'll modify your question a little bit. I think it will be interesting to discuss whether there's a use case for mobile payments in the B2B space versus just digital payments, meaning on a computer or whatever, you're working on issuing an e-invoice to someone, and that kind of an invoice gets through. So if I answer broadly, not just in the mobile payment B2B space, but digital payments B2B space, there are a lot of companies out there that are already doing, building infrastructures in place. I mean, in Canada, you have these accounting software companies like FreshBooks, for example, based in Toronto, building kind of a payment rail, or at least integrating payment rail in their accounting software, which is, again, in the same direction of thinking about payments as something that not as a standalone proposition, but it's as part of why people actually, when people are actually conducting their day-to-day life. So in the case of B2B, it's a small business needing to issue an invoice to someone electronically and getting paid electronically. So that's a use case for digital payments. So accounting software is doing that. You have companies that, for example, facilitate payments in the restaurant industry, like Toast. So a lot of those are software plus payments propositions out there, and I think that's one thing to watch out for. The other to watch out for is, I mentioned MasterCard, Visa of the world. MasterCard launched a product called MasterCard Track, which is complete. It's a B2B payment rail. It's completely off the credit card payments payment rail that these traditional networks are known for, and that was launched in collaboration with Microsoft, if I recall correctly, and so there's actually data flowing back and forth. They're using kind of AI and so forth to vet the suppliers and the buyers and so forth. So I think those are the two broader trends that I know that maybe to keep an eye on, right? One is the traditional networks building new rails, and then the other is the enterprise software companies, offering payments as an integrated digital solution.
I think
If I-
sorry, go ahead.
I was just going to say, if I were to answer that question from a digital wallet perspective, as a fintech, when we're enabling those payments and transactions in the B2B space, we're looking at the ISO 222 in terms of the standard for the data and the data that accompanies all of the payments. And so that's what we're keeping our eye on and looking at kind of globally, and also looking at the standards in the open banking as well. And so that's what we're using as kind of the standard for the data transfer and capability.
Definitely, and if you look outside of Canada, like WeChat is a great example of this. In China, they've got a full ecosystem, and I think the world of mobile payments, ultimately the goal of most of the companies, specifically in mobile wallets, is to own that ecosystem, and it's have everything from the consumer to the merchant who's buying goods from another merchant, and having that whole path. And as that mobile wallet technology sort of gains traction, the technology for transferring the data back and forth will follow, and sort of come along with it. I think we had another question over here.
Yes, thank you. I'd like to challenge one of the propositions that two of your panelists made. They suggested that the real-time rail will do little for the growth of mobile payments.
Okay.
The real-time rail primarily deals, one of the key benefits is it deals with liquidity risk. If it deals with liquidity risk, does that not create opportunity for the fintechs who have been largely excluded from this marketplace to promote growth within the mobile space?
That's a good point. That's probably very fair, for sure. I think it still goes back to, if I look at just Canada, right, it still goes back to, great, we could have the real-time rail, but what will be the rules around which a fintech can connect to it, right? Because that's still not exactly clear, and that's still definitely a challenge. But if we look globally, I would agree with you for sure, because I would say that globally that is what we're seeing in a lot of the other markets where real-time rails already exist. There is tremendous opportunity for fintechs to actually connect either direct or an indirect to that real-time rail. And you're right, that's absolutely, especially on the digital wallet side, we're seeing tremendous growth in transactions and volumes.
We look at the real-time rail not as a Trojan horse, but as an opportunity.
Absolutely, that would be for sure fair. It's a huge
don't
opportunity
think
for us.
I don't think any of us said it's a Trojan horse.
Yeah, not at all.
But I would agree with that. I think my point was really about the consumer experience. And the consumer may or may not know, what's behind it. But the point about the real-time rail opening up opportunities for innovation, I think is really very valid. And I don't know where that's going to lead, but I'm pretty sure it's going to lead to some exciting futures.
Well, it may force the standards,
Yeah.
right?
Yeah.
More collaboration,
Yes.
more broad industry perspective.
I think just to echo the monetization point, because basically the liquidity point that you just made has actually a monetization angle. If I were to predict the future, I think you're going to go through a period where real-time payments coexist with existing payment. I mean, unless regulation says no more existing payment rails, I don't think that will be the case. So as long as they coexist, then it creates at least a temporal opportunity, maybe for five years or 10 years, where the payment providers could offer real-time payments at a different price point as traditional payment rails, right? So, and this is already happening today. If you look at bank-to-bank transfers versus credit card transfers, I mean, there are different price points today for different payment rails. So that's an angle. But of course, down the road, it's just like the smartphone replacing dumb phones today. I think if nobody can buy a dumb phone anymore, then let's say that becomes the only standard because the other payment rails die off in their natural way. Then it becomes the standard, right? It becomes more of a utility commodity than anything else.
Fair enough. Any other questions? Can't see that side of the room that well. Nope. All right. If you guys have any private questions that you wanted to ask us, we'll be around after the session, just hanging out here for a little bit. And thanks for coming to see the future of mobile payments.
Thank you.